Time to welcome on board Sandip Sabharwal as well, who joins in on the show. Sandip, why don't we start off then by talking about the entire sugar basket? Given the kind of news flow that we've seen, what is your assessment as to how things are likely to pan out for individual stocks within the space?
Sugar was a good story building up because of the fact that global sugar prices were on a boil, and then domestic sugar prices had also moved up, and on top of that, we had the ethanol story. Now, with this one action, the government has actually spoiled the entire space because if you ban ethanol production, then sugar production goes up. If sugar production goes up, sugar prices come down. And a lot of companies have spent a huge amount of money in setting up these plants for manufacturing of ethanol. So, what happens to them? Because the move is quite drastic because it C heavy molasses hardly has any alcohol left. So essentially, basically, if you ban sugar cane juice and be heavy, then effectively production will just collapse. Now, whether there'll be a rethink on this or not is something we need to see. But as of now, it's a tough space for investors to be in. So eventually there will be a rethink, and to that extent, the stronger sugar companies will come back because otherwise many of the companies will go into deep losses. They will not be able to pay farmers, and then the entire equation for the government also goes for a toss. So it's wait and watch. Right now, I wouldn't recommend buying into this space at this stage.
What would you recommend one should do with the banks now? Just add more or stay invested if you're holding from old? Because that's one space where everybody is excited now, Sandeep.
Yeah, so banks they consolidated for a long time. So I think the larger ones do offer value still among the entire market. So the overall markets become overbought. I think after the sharp up move, what we've seen over the last 2 months. So finding value is becoming difficult now. But among the larger banks like ICICI, Axis, I still like them at these prices also. And we are starting to see participation from HDFC Bank, Kotak, etc. also as FII flows have started to pick up because they tend to be more of FII favorites.
Is there only one? Looks like there's like this one trick pony for the markets that FIs will come back, buy, and when they will come back, we will sell them higher. Everybody seems to be talking about this, Sandeep.
No, the story is about economic outlook and the overall macroeconomic scenario. I think the economic outlook and macroeconomic scenario for India is very strong. I don't see any negative in that. So, per se, there's no big reason to sell aggressively in this market. But given the way the markets have moved up, it's tough to find value to buy. So, I think that's the space we are in right now. So, I would say it's a market where you buy on pullbacks rather than try to sell on rallies.
Sandeep, why is there so much of excitement in a Trent and a Titan? They both represent consumption. Consumption is not doing well. But Titan's market cap 3 lakh crore, Trent's market cap 1 lakh crore. These are two unique Tata companies which are now commanding P multiples as if they are the next AI companies.
It's all driven by exceptional performance, Nikunj. Like the way Trent has performed in the light of slowdown and the way they have consistently not only grown, you compare it with any retail company in India, like their performance is so exceptional, and I think that's what has driven the stock price higher. And when the company keeps on performing so well, there's no reason for existing investors to sell. New investors emerge, they are not raising equity, so that drives the stock price high. And same is with Titan. I think what's happening on the Tannish franchise is it's I think it's absolutely superb the way they've been able to deliver. So like even I had expected that they should be slowed down, but then they are capturing market share in such a manner that even in a market which has overall slowed down, they keep on doing well, and that drives the price earning ratio higher. So Trent, unfortunately, I have not participated in the entire creation journey, but then the numbers speak for themselves.
Are you confident of, see, when we say confident, it's all about probability scenario. I just want to bring this point out for, our viewers. I wish predicting the future was that easy. No one knows. But you work with probability. If the probability is more than 60-65%, then and valuations are strong, then it becomes an investment. That's a very basic thesis which long-term investors they follow. Look at probability and look at margin of safety. So Sandeep, where is that combination of margin of safety and probability that 3-4 years of earnings is strong?
I think there should be many companies which would happen, which where this could happen. But I think if we see policy flip-flops, then some of these stories, which are relying on PLI for growth, etc., now if there's suddenly sudden clawback. So I would say that yeah, we have to be careful about segments where the companies are purely relying on government policy or support for growth. That said, where there seems to be clear visibility is the defense space. I think the kind of order flows that are flowing on to uh, especially the PSU defense companies and eventually to some of the private sector ones. So I think that's one space which will keep on buzzing. Valuations are a bit stretched, but I think they will remain stretched for some time. Then we have the entire, I think the infrastructure construction space still will continue to do well because that's one space where order flows will be strong. And there was an expectation as election uncertainty comes, what will happen out there. But the recent state elections seem to dissipate that thing. So I think we'll see some continued momentum out there. Then there are the emerging spaces related to uh, renewable energy, etc. So I think that's where also there could be some opportunities.
Right. You've also got some stocks from the defense space that will be in the spotlight. Masgao Dock has received an order worth about 1,100 odd crores from ONGC. Let's understand from you, Sandeep, as to how you're looking at the long-term potential for some of these defense names. Do you think that for select companies, perhaps the order book could be exhausted in the next few years? Is that a bit of a concern, given the steady run-up as well?
In fact, the order flows, as I've observed, are much higher than what they are able to execute. So I think the challenge will be on the execution cycle rather than on them getting orders at this stage. So I would think order flow is not a concern for a majority of these companies.
Okay. Majgaon shipyard, Cochin shipyard, just been such a dream year. Now, Sandeep, we talk about government companies which have a play on defense, but which are the pure defense companies which have a play on defense?
In the private sector, the companies are relatively smaller. So I think there are some uh, which are into uh, doing work for a lot of these missile and related components and software that goes into them. There are some companies which are into uh, simulation of various weapon systems, etc. But they are relatively smaller. Like they have grown from what they were 2-3 years back, but they are relatively smaller. So I think those are the only pure plays. Other than that, we have companies like Bharat Forge, Tata Motors, some other companies also doing work on defense. But for them, the overall order as a proportion, a flow of from defense as a proportion of the total sales is still small.
Okay. Uh, just going through some names here. And well, sugar was a big casualty last week. We did see some chop and churn in some of the NBFCs. And another big casualty last week was Paytm. Sandeep, given that what Paytm has indicated on the back of what they heard from what directive is from Reserve Bank of India, do you think it's a good time to buy this selling into Paytm? Do you think markets have reacted far too much post their commentary?
On the other side, I think the markets were giving too much credit to the earnings growth of Paytm, which was coming largely from these commission incomes which they were earning out of these getting these loans, etc., sanctioned. And that is not a business for which you give a LP. So I was actually very surprised how those analysts were so gung-ho. I think sustainable business model for Paytm is very limited and they are facing challenges from all sides. So I would not be a buyer.
Time also keep an eye out on some of the auto stocks like Tata Motors looking at increasing some prices of their commercial vehicles effective January by about 3%. Sandeep, where do you stand given the fact that it hasn't been all that enthusing when it comes to the festive demand for some of the auto majors? How are you looking at playing this space?
Yeah, so I think demand has picked up, but it's not picked up to the extent what many of the companies were expecting, and to that extent, it could lead to a phase of consolidation. But overall, directionally, I think things should be good for both consumer durables as well as auto companies because as inflation remains under control, as interest rates remain stable, we will definitely see a pickup going forward, and the input cost pressures are pretty muted. So overall, valuations are still not excessive and they are still in comfort zone. So I would still be positively inclined on the overall auto space.
But Sandeep, I look at the data points. So the data points are that there is a slowdown, right? Whether it is in demand, post Diwali demand, stocking of FMCG, what the November dispatch numbers were there. I mean, Westlife is saying that they are struggling to sell burgers. Pizza Hut seems to be indicating the same thing. Jubilant again is going through slowdown. If there is a slowdown, do you think it's a matter of time it will hit everybody, especially in the discretionary space?
So many of the discretionary space stocks are as it is down. So now what we need to think of is that is this going to be a prolonged slowdown which will accelerate towards a bigger slowdown, or as things stabilize, we'll see a recovery. So I would be more optimistic rather than pessimistic. But many of these companies, as you also pointed out, are seeing slow growth, and to that extent, and many of them don't have also valuations which are cheap. So valuations are also not really cheap for many of these companies. So we need to time entry. So I would say that I would be a wait to buy investor in some of these companies rather than try to sell them for a 5-10% decline.
All right, thanks Sandeep for joining in today on the show and sharing with us your market outlook.